Hi, I'm Klaas Fleischmann and I welcome you to New Business Models Tutorial 2.2, Part 1, Value Capturing. But before we dive deeper into value capturing, where are we now? You should have a thorough understanding of the business model canvas and its 9 building blocks. You also should be aware that there's a lean canvas with 4 different building blocks. You should be aware of concepts like problem-solution fit, unfair advantage, key metrics, high-level concept, and early adapters. Now, what does the concept of value capturing actually mean? It means the ability of a business model to make a profit. This is very nicely shown in this particular graph. As you can see, on the horizontal axis we see the number of units being produced, and on the vertical axis we see the revenue or the costs. The red line depicts the fixed costs, so the costs that don't change with the number of units being produced. Like, for example, salaries of the people that are producing these products. The yellow line represents the total cost the company is incurring with the number of units that are being produced. The difference between the total cost and the fixed cost are the variable cost. The variable costs change with the number of products that are being produced. Together, the variable cost, the fixed costs, comprise the cost structure of the company. Now, we also see a break-even point. The break-even point is the point where the revenue of the number of units produced and being sold intersects with the total costs. Now, what is value capturing? Value capturing is the area in the business model that right here between the revenue line and the total cost line. In this particular area, the business model is producing a profit. And therefore we're calling this the value capturing part of the business model. Now, let's have a closer look at the cost structure of a business model. The cost structure of a business model is the most important costs incurred while operating under a particular business model. Remember, I asked you to look at key activity and key resources in order to find those costs that the business model is incurring. Now we are using them to transfer them to the yellow part of the business model canvas. But please note, creating and delivering value, so the key partnerships, maintaining customer relationships, and the promises made in the value proposition also incur costs for a business model. But for the introductionary purposes of this course, we just focus on key activity and key resources to transfer those costs into the cost structure building block. So what are the most important questions to ask yourself? Well, first of all, is this a game-changing cost structure? Is it disruptive? For example, Uber changed the taxi driver industry. By transferring the ownership of the cars from the taxi company to the taxi driver, it completely changed the cost structure of the business model. And therefore, it created a new successful way of delivering taxi services. The second question that you have to ask yourself, is your business model value-driven or cost-driven? Value-driven companies especially focus on the value creation part of the business model, and therefore costs incurred in that part should be transferred to the cost structure. Cost-driven organizations focus more on the resources, and therefore costs in the resources should be transferred more to the cost structure building block. The next question is, how much can be done by others? For example, outsourcing. H&M, for example, outsources a lot of its production to Asia, and therefore is transferring a lot of costs to low-wage countries. The next question is, could you maybe change the cost from fixed cost to variable cost? Again, investors don't like fixed cost that much because they mean risk. So if you could in an iteration change the model to a more variable cost structure, that is interesting to investors. In your assignments, we're asking you to look at the fundamental costs in your business model cases. So please look at the key resources and transfer 2 or 3 fundamental costs to the cost structure building block. And look at your key activity and transfer the cost of that particular key activity to the cost structure. Now, why is the cost structure so important? Did you know that 90% of new businesses fail in the first 3 years because they fail to understand their costs, or what it will take to create the goods and services they have promised in their value propositions? So why is the cost structure building block so important? Did you know that 90% of new businesses fail in the first 3 years because they fail to understand their costs? But also larger companies fail. For example, United Airlines, one of the major big American airlines, they made last year $195 billion in revenue, but only 0.002% in value capturing. Google, on the contrary, made only $50 billion, but was able to capture 21% of those revenues. Of course, every company will try to minimize its costs. But low-cost structures are more important to some business models than others. In general, there are two types of cost structure: cost-driven and value-driven. Cost-driven companies focus on minimizing costs wherever possible. For example, Ryanair tries to minimize staff costs. I don't know if you know that there's a lawsuit between Ryanair and a lot of pilots over wage and salary issues. H&M is outsourcing a lot of its production to Asian countries to minimize production costs. Both companies are using automation and websites to automate the customer journey as much as possible. On the other hand, a very good example of a value-driven company is Dutch grocery delivery service Picnic. Not only does every customer of Picnic know the name of the customer the groceries are delivered to, they also have a customized ordering system, and if there's mistakes being made, then the customer service department will call the customer and tell them that, or email the customer that there's been a mistake and it will be solved. Even the deposit for the packages is being taken care of by Picnic. Now, the cost structure has 4 important attributes: fixed cost and variable cost. Costs that remain the same despite the volume of goods are being called fixed costs, and variable costs, as explained in the graph earlier, costs that vary proportionally with the volume of goods or services produced. And the third and the fourth attribute are economies of scale and economies of scope. Especially if you're analyzing a bigger company in your assignments, you need to focus on economies of scale and economies of scope. Economies of scale: the higher the volume, the lower the overall cost per unit. And economies of scope: reduction of costs when a business invests in multiple markets. Therefore, marketing department costs can be spread over these different markets, and therefore per activity can be lower. Let's go back to our example of Zoom Us. I'm now back in our platform strategizer and in our tutorial example Zoom Us. As you can see, I transferred costs from key activities and key resources to the cost structure building block. I used the same colors for the cost of key activity. Remember, Zoom's cloud runs a distributed network on low latency multimedia routers as the key activity. And I created a sticky note here with the same color. I did the same thing here with costs that are related to the key resources. Now, how did I arrive at these costs down here? I googled for annual report on Zoom Us, and I arrived at this particular page here. This is an investor page and will have a lot of financial information. Now, in your case studies, you might not be able to find that particular information. However, some of other students, they try to call the company or email the company to find that particular information. For Zoom Us, let's see if we can find specific information. And remember, we're looking at cost and revenue information. Cost and revenue are always found on a so-called income statement or profit and loss statement. Let's see if we can find anything on income statement and profit and loss. Well, this is a balance sheet. This is not what we're looking for. But down here we see that there is a income statement, consolidated statements of operations. It shows you the revenues, it shows you the cost of those revenues, and it shows you the operating expenses. The fiscal year of Zuma's ends the 31st of January, and therefore 2020 is the year that we want to look at because it's the most recent year. We see that Zuma's had revenues of $622 to $623 million US, and you can see the cost of making those revenues by the platform were roughly $115 million. I just quickly calculated, but this is roughly 18% of the revenues, which is very, very low. And then we have three main categories of operating expenses, so that the expenses, the resources needed to run this particular platform, research and development, sales and marketing in general, and administrative resources. And you can see the respective numbers here. So this is the information that I will need to create the cost structure building block. So looking at the costs of the revenue, which is only 18% of the total cost, which is quite low, and therefore I can also already say it's quite disruptive to event, training, or educational service industry. I transfer it to here and I just create a sticky note, cost of revenue, $115 million. And I can say the three main expense categories are research and development for the platform, the network, and the data. Marketing expenses for content marketing, the website itself, probably social media expenses, and sales commissions for the people that directly visit governments and enterprises and sell their services there directly. And administrating. We already found out that terms and services and intellectual property are two elements that belong to this particular cost category, and we transfer them here. And you can see I transferred the numbers to the particular building blocks. Now, how do I get these numbers onto these sticky notes? Click on them, click on estimated cost structure, fill it fixed or variable. Now, based on this particular income statement, I could not tell if this is fixed or variable. So just to be sure, I keep them fixed and I fill in the number here and I click on save, which I will not do now because I didn't change anything. And the particular number in cost occurs on the sticky note. Now, what would happen if I would know if that is for sure it's a variable cost? Then I would click on variable, and then it becomes clear why I urged you to fill out the customer segments very attentively. As you can see, then you can assign different elements or different parts of that variable cost to the different segments. If we know the cost per segment, and if we know the revenue per segment, which we'll look at later, then we see which segment will be really the most important one to focus on. I'm just canceling this now because I didn't change anything. And it gives me an overview of the cost structure. Now, finally, we need to have an overarching analysis in our assignments of this particular cost structure. For Zuma's, I wrote up it's disruptive because of the new platform. Education is changing, training is changing, the whole event industry is changing. Event industry is usually a lot of staff, a lot of people dependent. So it's this really disruptive here. It's value driven because with that single platform, basically the full problem of the working from home demand is being solved. And a lot of cost is coming from the resources. 64% is coming from the resources, and maybe even more. So there's a huge potential that those costs could be made variable or could be outsourced as well. So that finalizes my analysis of the cost structure building block. So to finalize this tutorial, by now you should know the definition of a cost structure. You know that there are two types of cost structures, value-driven and cost-driven, and that there are four important attributes of cost structures that you need to analyze for your assignments. And finally, you know how to apply these cost structure elements and types and attributes to a real business model based on the example of Zuma's that I just gave you. In case you have further questions, please do not hesitate to ask them in your online sessions later this week. In the next tutorial, I will focus on the revenue stream part of the value capturing element of the business model canvas. So for now, good luck in designing your businesses. Have fun, and I'll see you later. Thank you.